Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards, and the investor reports to look at what's really going on in the customer data, and to ask global thought leaders about their thoughts and views on the future of banking and payments.
Welcome to RFI's Banking Uncovered, where this episode I'm delighted to welcome to the show Hubert Petka, the Group Director for Consumer Banking at RFI. So welcome, Hubert, and thank you very much for joining us.
Thank you, Charlie. Pleasure to be doing this with you.
Good. So I wanted to start really talking about fintechs and about the rise of fintechs, because we've been talking about the rise of fintechs since 2014, 2015, when they kind of first appeared, and it really feels like 2025, like they've hit their straps. They're starting to get some really big numbers. They're starting to be really profitable. They're in the media all the time with some really impressive and potentially alarming stats for the traditional banks. So if we go right back to, I think in 2010, there hadn't been a new UK banking license for like a century, and then from 2013 onwards, there were 68, 69 banking licenses, granted, some of which sort of blew up, some of which are doing really well. And we've seen some really impressive numbers. So in RFI's data, like, back in 2015, we were in the single digits for the percentage of the UK population that had tried a digital only bank. And then that grew exponentially from 2018 up until 2025, where now 57% of the UK population has tried and is using a digital only bank, and we've seen it shift through the early adopters, which were mainly Gen Z and millennials, and really shift across all the different age segments. So what's the appeal of the neobanks and the digital only players? What are some of the things that they've been doing to attract customers away from the traditional high street banks, which are so well entrenched with the UK consumer?
Yeah, really interesting topic, Charlie. And as you said, we had this period of 100 years with no single new bank. Then we had Metro Bank in 2011, and then we had 69 of them being launched in a decade since. I think the interesting thing about neobanks and fintechs, there are different drivers of appeal for different brands, I would say. If you look at the early ones that entered this market, I mean, the likes of Monzo, I think the aspect of novelty was really the key factor because they did look really fresh, right? If you look at Monzo, it is still very fresh provider, but if you look at Monzo 10 years ago, obviously you have a digital-only proposition, a very vibrant brand, vibrant cards. People were attracted by this, I think, in the early days, giving someone else a shot. And I think the one key thing that enabled those banks grow in early years was the seamless onboarding process. You didn't have to go into a branch with your, passports and bills and queue and open an account. You were able to open an account within minutes. And I think that was a really important aspect. It wasn't perhaps particularly inspiring to consumers. It wasn't a new flashy feature or anything. But if you lower this barrier to entry for consumers, if you make it very easy for them to start interacting with you, start engaging with you, you get some people willing to give you a try, particularly in an industry like banking. There are two aspects to banking. It's obviously a very conservative space in virtually every single market out there in the world. I mean, maybe in some developing countries it's slightly different, but if you look at the Western world, pretty much every single big market has a fairly conservative market, and people are very cautious where they place their money. With neobanks, the fact that they allowed consumers to start using them, they didn't attach many different conditions to allow people using them as well. There were no fees for most of them. You didn't have to have your salary transferred there. It's just open an account, top it up whenever you want to have a top up, and start using and start interacting with that product. So I think that was really one of the key things. And I think the digital propositions, if you look at the mobile apps of those neobanks, they did look very different, right? They looked more like an app from outside of the banking sector, right? I'm not saying that apps of traditional banks back then were bad because they will allow you to do most of the key things you needed to do, but they very much looked like a virtual store of a bank. Monzo or Revolut as well, Starling, they had a very distinct look. The ease of use, which I think still is really the key requirement that consumers have towards apps. When you think about digital banking, the overwhelming majority of transactions are still very easy transactions. People want that seamlessness of interaction. I think this is what they got really right, and that's allowed them to.
Yeah. I mean, I was going to say, sorry to interrupt, but like the look and feel was so important, because I think what some of the traditional banks were potentially slow to realize was when when you look at the smartphone, your smartphone, the screen estate or real estate as they call it on the screen of the phone, you don't go, okay, there's my Airbnb app, there's my travel app, there's this app, there's this app, there's my app for the gym, there's my app for how many steps I've walked. Oh, there's my banking app. That will look really different because it's a different, banks don't provide the same kind of apps that everybody else does. That's not how consumers think. They just go, why is that app different? And I think what the neobanks got really well was we need this to look like a really, really seamless, frictionless app that just looks like all the other great apps on the screen.
Yeah, and I think the one thing that also helped those banks, right? In early days of the operations, they didn't even have a fully fledged current account. It was a payments app, really, right? So you didn't have to think about overloading consumers with multiple different features. Just build what works, start there, and then start developing the proposition. And I think with Monzo, I don't know if this is still the case with Monzo, but I remember in the early years, there was a very strong community spirit among the users. They would test the features with the customer base. They had a really good sort of semi-blog thing on the website as well, allowing consumers really to contribute to the building process with ideas, with new features. And I think that really worked as well in the early days.
Yeah, I remember talking. This is back in 2016 to Tom Bloomfield, who was the founder of Monzo, and that was the thing he was most proud of, and that's what he said at the time was really going to drive their growth. And it was obviously a great strategy and very prescient of him because it did. But things that seemed quite esoteric and odd at the time that the community were commenting on, like can we have the app doing this when it's in off-peak travel was the example I remember he gave me, and like differentiating between off-peak and on-peak and telling people, don't go to the train now because if you wait 5 minutes, you can get an off-peak train and save some money and things to me that seemed really quite marginal, but really created that loyalty within the customer base. But talking about propositions, so obviously. Initially, there was a grow at all costs, and all the PR for the Monzo and Revolut and Starling and all of them was just these big numbers all around growth and growth and growth. And the high street banks sat there going, yeah, but they're not making any money and they're not profitable. And we've seen a kind of shift in the last year or two in how they're growing. So Revolut, their customer base has grown 38%, but their customer balances have grown 66%. Their revenue is up 72%, and they've hit that, billion in profit, which is a big number. Monzo's profit is not so much at 15 million, but their numbers are up 88% from a customer engagement point of view. Their revenue is just shy of a billion for the year. So what are some of the products and services that they're now offering? You said they started with this very, very simple, it's a
Yeah.
payment app effectively rather than the fully fledged banking service. So what are some of the products and services they've introduced now which are driving this greater engagement and deeper and richer customer relationships, which obviously produce more revenue and profit?
I think, Trey, well, let me start by saying that I don't think that initial playbook was unique. It might have been unique in the banking because, as we said earlier, there weren't any new banks back then. But if you look at that playbook of trying to scale initially as fast as you can without worrying too much about revenue and monetization, it's very similar to what of the technology firms in the United States have been doing for decades, right? I mean, if you look at Amazon, if you look at eBay, just trying to get Facebook, I mean, it's a perfect example of that, right? Try to grow as fast as you can, try to get as many users interacting with you as you possibly can. Don't worry about the depth of interactions, just get people to start using you. I think it's perfect, right? If you have that, obviously you need to have a financial muscle behind you because it's not a cheap way of expanding. But if you can do it, then you can start growing. But there are limits, obviously, to this, right? You can be growing this customer base, and a lot of the neobanks have been facing that challenge that they had enormous numbers of customers. I mean, Monzo has had a 10 million customer now for a number of years, but activity fluctuated. So those weren't customers that you typically see of the relationship they had with neobanks wasn't a relationship you have a big six bank in here when you tend to use them regularly throughout the year. There's no changes in that. There might be some changes, but they're not extensive changes to the interactions you have with your bank. With neobanks, then you have customers using them for a while, then dropping out, coming back later on, using them for travel and so on. And I think that there's always been a challenge for those banks. I think what has changed, and I think this will probably answer this question more directly that you had earlier, is that in recent years, neobanks started releasing new products, started releasing new features as well that allow them to deepen those relationships. So some of the numbers you quoted early on pointing to the growth, that growth really in revenue, in profitability, only really started when you had those institutions releasing new products, releasing new features, and having the customers engaging with them more. I remember seeing, I think it was a quote from Revolut's a CEO and founder who said when he, I think, commented on this massive increase in revenue and profit they had last year, he said it wasn't just because of the growth in the sheer customer book, it was also because we are seeing customers engaging with our products more than before. Um, and I think there's also one really interesting aspect to those partnerships. Because if you look at some of them, they're often partnering with other digital-only fintech providers. You see a lot of these partnerships. You've had Monzo with TransferWise or Wise now, which was
Yeah, you've got Monzo with Wise, you've got Chase with Nutmeg, you've got
yeah.
Revolut with Shopper Supply, Revolut with Clearbank. I mean, obviously they're using these relationships with other entities that have a similar kind of tech, fast growth,
That's true. That's
customer
true.
experience DNA, and
But
that's
that's
obviously
one part of this,
working.
right? That's one part of this. So the other one here, so if you're a Monzo, right, if you're trying to get people to deposit a larger share of the asset wallet with you, and you know that there was always this, not I don't want to say distrust towards the banks because it's not about that. The banks enjoy a really strong reputation in the market, but they're liked by consumers as opposed to necessarily being trusted by consumers. So if you're trying to build a depositable wealth proposition, you might actually prefer to go with a more established provider. And I mean, I'm using this particular example because there's a really good use case in here. If you look at Monzo and its investment capability, they've actually partnered with BlackRock. And you couldn't go more established and more mainstream for a partnership in the investment space than BlackRock, which are leaders in the world. And I think it's an important one because if you have a partnership like this, it just shows you as a mature provider in the market. If you can engage BlackRock to offer that solution through you, it helps you, but it also builds that reputation with the consumers. Consumers be more inclined to trust you with the investment money if they know that you're partnering with BlackRock, who they've probably heard of before.
Yeah, and that's great for wealth. But the fundamental principle of banking going right back to when banks first started is around that primary banking relationship. And that's one thing that partnerships like with BlackRock are great for like the broader banking proposition. But when it comes to the key of like, getting consumers' salary, getting that this is my primary banking relationship. I know that from RFI's data that they've started to really accelerate their success in that area. But what are some of the engagement tools that they've been using to do that? Because partnerships are great, as I said, but they don't work on that primary banking relationship. So what have they been doing to directly engage with the consumers to get that kind of growth? And how successful have they been with that growth?
Yeah, so I think some of the PFM tools work well for some of the banks. I think Monzo is a perfect example of this. So I think if you look at the banking landscape and the providers see in the UK, probably every single of the bigger banks these days offer some sort of PFM tools. If you look at our data, you don't really see more than 20% of consumers telling us that they use budgeting tools with the main current account provider. If you look at Monzo's customers, it's 60%, so three times the market average. And one of the key aspects fueling the primacy for Monzo within among the consumers that we tend to speak to on a quarterly basis, it's the budgeting capability they have and how well integrated it is within the proposition. So I think that's one aspect. And I remember looking at some data around it was segmentation of consumers into those who use budgeting tools with their primary current account and those who do not. And among the former, the average spending on a debit card was nearly three times higher than those who do not use who do not use budgeting tool on the main
And that's
current.
global as well. And that's which is, this is on a personal level, this is music to my ears because like you, I think at RFI, we've spent probably about the last 10 years in every market we're in, presenting back to banks, what the customer data is showing that if you can get a really great PFM tool, it will absolutely drive greater engagement, greater cross-sell, greater revenues. And every bank in every market for the last 10 years has pushed back, going, well, this bank tried it, it didn't really work. Really, a consumer's going to be that blown away by a great budgeting tool. PFM's a bit of a it's just something that they like to point to, but it doesn't really drive behavior. So we have the evidence now that the data has always been right, and it's driving behavior,
Yeah.
which is fantastic. But what are some of the obviously we've got a seamless customer experience. We've got some of these great partnerships with tech firms that have similar kind of DNAs. We've got the budgeting tools, the PFMs. What's been, we're talking a lot about what the neobanks are doing, but let's be clear, the high street banks haven't just been sitting there. They've also obviously been reacting in not just the UK but every market, and using their considerable financial clout and the fact that they have that trust that's been established for decades, and they have that primary banking relationship and really trying to leverage those to fight back effectively. So what's been some of the ways that the innovation and disruption driven by the neobanks has impacted on the customer value proposition that the traditional high street banks in the UK have been offering?
I mean, the market has definitely become much more competitive these days than what it used to be when they first started with RFI over a decade ago. Um, if you just looked at the big six banks in the UK, I think virtually every single one of them has relaunched the current account proposition in the last couple of years. Better apps. I mean, I think Lloyds is probably the most recent example, relaunching their app earlier in the year. You have rewards attached to current account proposition. You have switching incentives. So I think those propositions have definitely improved over the last couple of years, but also the market has changed. When I first opened my current account here, the most important aspect to me, it was free. I didn't have to pay anything for a current account. It was relatively easy to open. If you look at consumers over the last couple of years, they're definitely much more likely to be driven by rewards, by incentives. They do expect something in return from the bank. And I think the other aspect I find really interesting nowadays is that, we always feel that consumers should be doing more or be more active in managing the money. Actually, UK consumers are, I would say, very savvy in the way how they approach the finances. They use multiple different institutions. It's over five different providers on average across all the different relationships they have. Yes, if you have this main bank status, it's much more easier for you to cross-sell products to your customers. But actually, if you look at credit cards, if you look at personal loans, if you look at mortgages, consumers are perfectly comfortable going to a provider that's not the main bank to access those products if they think they're better fit for them. So I think, the fact that you have more different providers, they have more different propositions, made the market more competitive, and I think made consumers more aware of the fact they can actually access a better deal. And big six banks still control over 80% of primary banking relationships, but you do see neobanks growing pretty exponentially. If you remember looking at our data a couple of days ago, back in 2022, neobanks had about 3.5% of the primary relationships in the UK. It's 6% 2 years later. So we're looking at 70% increase in primacy. They're still behind. If you look at the market penetration and conversion to primary relationships, they're still behind the big banks, but they are catching up. And I think these new propositions do help them close the gap. And I know about you, Charlie, but I do tend to keep tabs on the likes of Monzo, Starling, Revolut, Chase here in the UK, and try to be on top of what new products and features they release. It's very difficult to do it. It's not a big pool of different banks that I keep an eye on, but the pace of expansion in product and feature position is just exponential. A couple of days ago, I looked at Revolut, and if you look at the different packages they have, because the subscription element is the other thing they're trying to monetize and grow the revenue, having those different packages with different solutions. They offer not very cheap, but they do provide great value to consumers, who want to engage with those different propositions. I mean, you can get access to airport lounges these days through Revolut. It's a feature that, a couple of years ago was only available in this market through high-end credit cards, Amex, perhaps. Now you can get the same through neobanks as well. So they've changed enormously, and they continue changing in the pace that is much greater than that of traditional banks. But I don't want to take away from the efforts of traditional banks. Obviously, it's easier to change for the smaller providers that they have less of legacy systems. They are more agile. But banks have become way more agile in this market as well compared to where they were 10 years ago. You see, how quickly they release new features, how quickly they evolve the platforms, new products. It's a different, totally different game now compared to where we were 10 years ago.
Yeah, I mean, you say that, and I had this personal example the other day that two of my children, both under 16, for various reasons, that no longer wanted to use GoHenry. They both wanted proper bank accounts like their older brothers did. One wanted a Monzo account. I'm not going to say the name of the high street bank that the other one wanted or the reasons why, despite three brothers demanding that, like, why would you want to go with this high street bank? But anyway, so I had to set up their accounts, and I set up the high street bank account for an under 16-year-old, which took about 10 minutes, which if I had tried to do that 5 years ago, definitely 10 years ago, I'd been like, wow, that was so quick. 10 minutes, all on my phone, setting up an account with a high street bank for my child. Then I went and did the Monzo one for my other child. That took less than 90 seconds. It was
Yeah,
amazing. And the debit card arrived the next day. And a week later, we're still waiting for the other debit card. But so yes, banks have upped their game, but like the neobanks do have an advantage. But that kind of leads me on to my next question because I know you said they've gone from 2.9, roughly 3.2% to 5.9%. But we know from RFI's data in the last 3 years that they've actually acquired almost 20% of new primary banking relationships. So they're getting one-fifth of new players coming
correct.
to the market. And we know from RFI's macro monitor data in the US, it's a very similar story there. So SoFi and Chime and the other big neobank in the US, I think they've got almost 30% of new primary banking relationships over the last 3 years, more than Chase and Bank of America put together. No, more than Chase and Wells put together, not quite as many as Bank of America. So they are starting to get a really, really large, increasingly large slice of the new to market primary banking relationships, which presumably is, and they're starting as we discussed to grow. So at some point, that agility is going to start becoming less of a feature as they get bigger and by definition become slower. And so, what are some of the how looking forward, how do you think they're going to get the balance right between going for profitability and going for growth and effectively making sure that 3 years from now there isn't another new neobank that we haven't even heard of yet that hasn't launched that's using AI in a way that these banks aren't. That's an AI built
Well,
core
I'm
bank
sure there
rather
will be
than a digital
one.
bank,
I'm sure there will be
and
one.
that's then
Yeah.
stealing their market share. So how are they going to get that balance between kind of like profitability and growth in the
Yeah, so obviously difficult to know exactly what it is they have, in train in the years to come. I know of some US banks, digital-only banks. I think Sophie, if that's how you pronounce it, is one of the good examples. That what they have currently in terms of the product proposition is very similar to a full-service institution. You have a full spectrum of products across deposits, lending, credit, and so on. I think we are some years away from that in this market. I think what we're going to have is neobanks expanding into deposit savings as a way to start getting people to invest. I think the invest and wealth space, it's probably one of the biggest and top opportunities in this market. I think, interest rates, yes, in the last couple of years, they have been a little bit more attractive on savings products. But I think, we as an economy are shifting towards encouraging people to try to invest more and more. And I think this is the space where these providers will start differentiating a bit more. And you see that with Revolut, you do see that with Monzo, but it's not just the neobanks doing this. We also see, a lot of the trading platforms, sometimes coming from across the pond as well, relaunching propositions in the UK that are doing very well among consumers, particularly retail, smaller investors as well. So I think we are some years away from those institutions having full service propositions and having all the entire spectrum of different products. But I think they'll be launching selectively into some product categories when they think it suits them. And I think you had obviously Chase acquiring a Nutmeg some years ago. I read this morning they're planning to discontinue the Nutmeg name, and it's going to be known as JP Morgan moving forward as well. Um, so I think that's where we're going to see more activity among neobanks, and then I think offering additional services. So we have, I mean, I focus quite extensively on Monzo today, but if you look at Monzo, they obviously don't offer mortgages, but they offer a capability to link your mortgage to the account with Monzo. So you can keep an eye on mortgage, you can simulate different scenarios as well to try to understand how much you could save by overpaying, small monthly overpayments. And I think wealth is a great space because if you're thinking about the wealth, if you think about retail, smaller, younger investors as well, they are digitally savvy. They like not just the capability and the space to invest, but they like to be part of the journey. And I think those neobanks are really, really well positioned to appeal to those consumers. I think Revolut is a perfect example here as well, because it's not just about allowing consumers to purchase shares and hold them in shares, certain shares ISAs, but also you can do crypto trading, which is quite popular among young people as well. So I think they've been quite unique in the way they approach investments, and I think that's going to be probably a big battleground in the UK.
I know we're talking about the UK, but I just want to sort of step back and look a bit more internationally now, because one of the benefits and the joys of RFI's global data is you can get to look at different markets and see what banks and propositions are doing well. And traditionally, everyone looks across the pond to the US, which I would argue in digital banking is probably slightly behind the curve, whereas some of our clients in the Middle East and Southeast Asia are doing some really, really incredible things. I was stunned to read the other day that there are 8 billion people on the planet. 4 billion of them live in Southeast Asia and China,
Yeah.
and 4 billion of them live on
You
the
read the
red
same
of the
article.
planet. Like the
Yes.
concentration.
Yeah.
Apparently, they're all with 4 billion people live within I think it's 200 kilometers of a city in Southeast China, beginning with you, Yunnan or something. But yeah, there's obviously a huge amount coming from the east. So I'm not going to ask you too much about the Southeast Asia, but I am going to ask you about the Middle East. So going
Yeah.
east, but not quite so far, because obviously it's a place where you spend a huge amount of time working with RFI's clients there, presenting to the banks there, where like a lot of markets, there are some similarities, there are some differences. So there are neobanks, there are slightly different regulatory environment, but there's a different digital appetite amongst consumers. But what are some of the interesting things you see from both a similarity point of view in the Middle East and some of the differences where perhaps there's innovation occurring there? I remember like 7 or 8 years ago, Rack Bank were one of the first to do a kind of click and collect onboarding service, which no other bank was doing globally at the time. So what are some of the similarities and differences with the UAE that you see?
Yeah, I think UA is now probably, or has already entered, I would say, wave two of neobanks and fintechs. There was obviously a proliferation of these providers some years ago. A few did enjoy some success, many stopped really operating since then. But the last couple of years, I think, well, first of all, in Maastricht, which is one of the more established providers there, launching the digital-only proposition, Maastricht Neo, that's been very successful for them, and they're taking this to other geographies now as well, expanding into Egypt, Pakistan, and so on. WEO is probably a really, really interesting case because I think they've only started really operating about 3 to 4 years ago, if I remember correctly. Based in Abu Dhabi, they have both consumer and SME proposition. SME is really, really interesting for them because they're massive these days. They probably have a 10% share of the SME space in the UAE. And when I look at some of those providers, I think, Charlie, they take some of their playbook is taken from the neobanks in the UK, so the seamlessness and the easy onboarding process. And in the UAE, I have to say, so what you described early on with your kids in terms of them trying to open an account with established bank here in the UAE, it still takes days, if no more. You have to produce a lot of paperwork for a bank to. In many cases, not in every single case, but in many cases, it does take a really long time. So the fact that you can open an account instantly with neobank is a massive appeal and massive differentiator for them. So that seamlessness of interactions, strong digital capabilities, they're definitely trying to replicate some of the neobanks in here. And we've heard that from some of them in the UAE that we interact with. They do know exactly what's happening in the neobank space in the UK, but they're also looking to Asia. And I think Hong Kong and Singapore are really interesting places as well if you look at this neobank landscape. So Hong Kong, if I remember correctly, I think they have this quite unique way of referring to those providers, not neobanks. I think they call them virtual
Yeah,
banks
they're
now.
virtual banks. There's a special virtual banking license that the Hong Kong Monetary Authority
Correct,
issued.
correct.
Yeah.
And there were 8 of them given in 2018. And I read recently that these days, a third of the Hong Kong population has an account with at least one of these providers. But the key differentiator for them was the rewards.
Yeah.
Um, Rewards, interest rates. The established providers just simply couldn't really compete with those rates. And the reason why I mentioned this is that some of the digital-only banks in the UAE borrowed that part of the playbook. So if you look at WEO, and they grew exponentially in consumer space because for the time being, I don't know exactly what the situation at the moment is, but for the time being, they had by far the best interest rate on savings accounts. I think they were offering in the region of 6%. So no one got even close to that for a while. And people were moving the money because it was a free account. You could get a decent return on your savings. It was a key driver. So they're very savvy in the UAE because I always find this market particularly interesting because they're not really afraid to borrow ideas from different markets and test propositions. If they work, they work. If they don't work, they just pivot to different things. And that worked very well for these neobanks in a wave too in the UAE. And they also, what we discussed in the UK in the context of them trying to mature propositions and try to extract more revenue and profitability. They also doing that. So they're trying to grow in a way that's more mature and that lays a really strong foundation for them to grow relations with the customers. One other element just to mention quickly. So we focus a lot on wealth in the UK. Hong Kong is also very similar in that sense. If you look at the likes of Mox Bank, if you look at Star Bank as well, the wealth proposition is really a big feature in the second phase of the growth. So they also working very hard to deepen the relationships. As far as remember, as of last year, none of those banks in Hong Kong reached profitability, so they're still loss making. So they're working very hard now on trying to narrow the losses in the first instance and then grow in a little bit more sustainable way. And the wealth is a really big part of that strategy for many of them.
Yeah, I mean it is a slightly different proposition. Now they both started with very similar to the UK with with a payments app, Payla, famously for in Singapore by the EBS. But they do have the advantage that when we look at all RFI's global data and we look at investment attitudes, particularly amongst the mass affluent, then the mass affluent consumers who are going to be investing most and the most aggressively and proactively over the next 12 months. I think Singapore's number one, Taiwan's two, and Hong Kong is number three. So the amount of money being invested in those markets is significant compared to the UK.
Right.
But just talking about Hong Kong kind of leads me on to my final question. So as you said, there were these virtual banks. They specifically targeted the Hong Kong customer base, which is a very mass affluent customer base. And then Citi, who are traditional bank in Hong Kong, looked at what the virtual banks were offering, looked at the huge take up amongst their customers of the virtual banking services, and what can we offer that's specifically targeted to this segment that's different that the virtual banks can't do yet, and they worked out that the not just the mass affluent segment, but most Hong Kong consumers love to trade shares, and so they created a trading platform within the Citibank app that enables you any consumer to go in very quickly and seamlessly to buy and sell shares on the Hong Kong stock market and globally. And as a result of that one very focused feature where they were leveraging their capability as a global wealth institution, they still have the number one banking app in Hong Kong that beats all the virtual banks and the traditional local banks and the traditional international banks. So just taking that example of how a traditional bank can leverage its capabilities to defend itself initially and then proactively go after these new customers that are coming into banking. What would be some of the things, or what would be one of the things that you would say to the high street banks that they could focus on other than a seamless customer experience that would enable them to defend themselves against the increasing reach of Monzo and Starling and Revolut?
Yeah, I think that one of the key aspects of this would be moving the mindset away from we're here to offer all these different products to trying to think how they can actually support consumers in reaching their financial objectives. Because I think with the neobanks, it's not about them being there for everyone, having every single product you might need. It's for them the key appeal is really around creating that perception that if you use them, it's easier for you to reach your financial objectives. So for more established banks, it's trying to create more of that reputation, that perception in the eyes of the customers, um, making those products more user friendly, and allowing consumers to relate to those products in a better way as well, and really fully understand how those products can be used and how they can help them thrive. And I think the example Charlie made earlier about Hong Kong and the uptake of wealth solutions there, we are behind as the market. If you look at the potential in the UK, very sizable economy, sizable savings as well across the market. If you look at the uptake of those liquid investments, it's not particularly high across the different demographics. You see, mass affluent, there's always a higher tendency and an appetite for them, but there is a lot that can be done to support retail investors in making that first step into this world. And I think that's one of the ways that bigger banks could do more. And I think that some of them are doing this. I think it's easier to access investment products through more established banks now than what was the case a few years ago. But I think creating that perception, being there for customers, and showcasing how consumers can thrive using them, I think that will be a key aspect.
Fantastic. We could keep chatting for ages, Hubert, but we're out of time. So thank you very much for sharing your not just the data, but the insights and what you see out talking to clients in all the markets that you do while you're presenting data and insights on behalf of RFI. Thanks very much for coming on the show and sharing all that with us, and look forward to talking again soon.
My pleasure. Thank you, Charlie.